Thank you, Mr. Chairman. So we've been talking about investor confidence and the importance of investor confidence, but there's obviously a real problem here. According to a survey conducted last December by the University of Chicago's Booth School of Business and Northwestern University's Kellogg School of Management, only about 15% of Americans trust the stock market. That's 1 in 7. And just to give some comparison, about 35% of the public said they trusted banks, and about 17% said they trusted large corporations. 15% is not a good number. And this matters because people are not going to invest in the stock market if they don't trust it. And in fact, that's exactly what the data seem to show. Historically, when stocks are going up, net flows into the stock market are going up. People want to get into the market when they see that it's rising. When interest rates are low, that effect should be even stronger. But that's not what happened in 2012 and part of 2013. Interest rates were low, the market was shooting up, and net flows were actually down. And according to survey data from Gallup, the percentage of the public with money invested in the stock market is steadily declining over time. So trust in the stock market isn't the only thing that explains this trend. There are certainly other things going on, but it's also certainly a contributing factor. Lack of trust in the stock market means less capital for growing companies, slower growth in the economy, slower job growth, and it means that fewer Americans have an opportunity to share in the wealth that's created by a rising stock market, and that further increases the disconnect between Wall Street and everybody else. Now, we've talked some about it. Michael Lewis made headlines when he said that the stock market was rigged, and there was a lot of debate over whether he was technically correct. But when a company can claim to be trading on stocks and come out ahead 1,237 days out of 1,238 days, you can see why some people think the game is rigged for the big guys to make money and everybody else to lose. So I'd like to get your views on this. Mr. Wittman, let's start with you. What steps do you think are needed to improve public trust in the stock market?
Well, I think hearings like these, where people can listen in and hear the comments from the experts, I think is helpful. I think, with some of the failures that have been alluded to and have been talked about on the panel, previous panel, I think are some of the issues that investors worry and care about. But I believe the exchanges are working towards improving those situations, as Joe alluded to in his remarks about self-help and stability and resilience.
Mr. Wittman, I presume, though, that you've been doing this over some period of time, and what we see is confidence in the market seems to be going down, and people's willingness to invest their money in the market seems to be going down.
I'm not 100% sure that the confidence in the market and the decline in investments are tied completely together, though, myself. So I'm not sure if that's a true correlation.
All right. Although people are certainly reporting that they don't have confidence in the market and that they are over time investing less and less money, and that's certainly what the flows seem to show. So I don't know what evidence you have to the contrary, but it seems to me something needs to be done here.